Hi, good morning students. Myself Kulandaraj, accountancy lecturer, SDC College, Bangarpet. In the last class, we have discussed about the issue of shares at premium, forfeiture and reissue. Issue of shares at premium means what happens? The issue price will be more than the face value. So, in the last classes, we have done some 4 problems. Today, moving to the 16th problem. The problem is given like this. Bangalore Company Limited issued 40,000 equity shares of rupees 10 each at a premium of rupees 2 per share. The amount was payable as follows: rupees 2 on application, rupees 6 on allotment including premium, rupees 4 on first call and final call. All the shares were subscribed and the money duly received except the first and final call on 2,000 equity shares. The directors forfeited the shares and reissued them as fully paid up at rupees 8 per share. Pass the necessary journal entries for issue, forfeited and reissue. Now coming to this problem, the Bangalore Company Limited issued how many shares? 40,000 equity shares of rupees 10 each. That 10 rupees will be treated as an face value. At a premium of 2 is given, 10 plus 2, that is the face value plus premium will be called as an issue price here. That is 12 rupees will be the issue price. So 40,000 rupees shares value are being given under the issue price of 12. That means it is the issue of shares at a premium. The amount was payable as follows is given. Rupees 2 on application is given. When rupees 2 on application is given means first transaction will be for the receiving of the application amount. When we receive the application amount, what happens there? Bank account debit to equity share application account. Again, when we are transferring that application amount to the share capital account, automatically what happens there? Equity share application account debit to equity share capital account. Rupees 6 on allotment including premium is given. Rupees 6 on allotment including what is given here? Premium. So 6 rupees is the allotment which includes the premium. So you can see that the premium amount is 2. Then 6 minus 2, 4 rupees is the actual allotment amount. Remaining 2 rupees will be treated as the premium. So here what happens in the allotment also, we need to pass 2 journal entries. That is, first journal entry is for the amount due. The next journal entry is for receiving the allotment money. While passing the transaction journal entry related to the allotment, we will be making an transaction called, that is an share premium will be credited on the allotment, because the allotment amount here includes the premium. So what happens here? The first transaction will be, the third transaction of the allotment will be share allotment account debit, that is equity share allotment account debit to share premium account to share equity share capital account. The next transaction, while receiving that allotment amount, bank account debit to equity share allotment account. Again, rupees 4 on first and final call. Again, here what happens in the first and final call, we have 2 transactions. That is, first transaction is for the due transaction. Again, the next transaction is for receiving the amount. So what happens? Automatically the first transaction as it is, it says that due transaction means equity share first and final call account debit to equity share capital account. Again, when we receive bank account debit to equity share first and final call account, all the shares were subscribed and the money duly received except the first and final call on 2,000 equity shares. On 40,000 equity shares, we have received application money, allotment money, and if while coming to the first and final call amount, we have not received 40,000 equity shares. On only 38,000 we have received the amount on first and final call, because 2,000 equity shares, they didn't pay the amount on which amount? The first and final call amount. The directors forfeited the shares and reissued them. Whenever they are not paying the first and final call amount means the directors, they have forfeited the shares. What is the reason of forfeiture here means? They didn't pay the first and final call and that shares were reissued at 8 per share. So while coming to the giving information, what are the given information here we can see? See here, premium per share is given rupees 2. For the issue of shares, we can see that application 40,000 into 2 you will to get 80,000. On allotment 40,000 into 6 you will be getting 2,40,000. Under that pre-allotment we have a separate amount called as premium. So allotment actual amount is 6 rupees which includes premium. So 4 rupees is the allotment amount. So premium will be 2. So 40,000 into 2 you will be getting 80,000. On call, that is on first and final call, 40,000 into 4 you will be getting 1,60,000. So issue price per share, you can see here 6 plus, that is 2 plus 6 you will be getting 8, 8 plus 4 it will be 12. So issue price per share will be 12 here, face value is 10. So given for forfeiture, how many shares are forfeited? 2,000 shares, they didn't pay the first and final call amount. 2,000 shares into rupees 10 you will be getting 20,000. Unpaid amount, what happens? 2,000 shares, they didn't pay the amount on first and final call of rupees 4, so you will be getting 8,000. That should be credited to the first and final call account. Reissue price, that is reissued the forfeited shares, that is 2,000 shares are reissued at rupees 18, you will be getting 16,000. That should be debited to the bank account because we are receiving the amount of rupees 16,000. Now coming to the main problem here, coming to the journal entries in the books of Bangalore Company Limited, journal entries relating to the issue of shares at a premium. So first transaction is receiving of the application amount. I already explained in the above thing. Bank account debit to equity share application account, that is of 40,000 into 2, it becomes as how much? 80,000. Coming to the next journal entry, that is while transferring the journal entry to where? To the equity share capital account. Equity share application account debit to equity share capital account. The same amount of 80,000 and 80,000 is transferred to the capital account. The narration has been given, being application money transferred to share capital account. The next thing, we need to see the allotment. Here on allotment, one important thing is there. On the allotment, we have a premium. So in the third transaction, we are showing the premium separately. See here, equity share allotment account debit 40,000 into 6. Overall amount is 6 rupees. Under that, again we are showing that to share premium account 80,000. How that 80,000 comes? 40,000 into 2. That 40,000 shares into 2 rupees is the premium. Then remaining amount will be the actual allotment amount that should be transferred to equity share capital account. Remember here, equity share allotment account debit overall 40,000 into 6, 2,40,000. To share premium account 40,000 into 2, you will be getting 80,000. That is the actual premium amount. Again, to equity share capital account, the remaining balance of 4, that is 40,000 into 4, you will be getting 1,60,000. Being allotment money due, including premium. The next transaction, after that we need to receive that allotment money. So automatically bank account debit to equity share allotment account, including premium, we will be receiving the amount. The next transaction, can you see here, equity share first and final call account debit to equity share capital account, being call money due. We are receiving, that is we are making the due here. On which amount? Equity share first and final call account. On how many shares we are making the due here? 40,000 shares. That value of the share is, that is value of first and final call is 4. So equity share first and final call account debit to equity share capital account 40,000 into 4, you will be getting 1,60,000 and 1,60,000, being first and final call money due here. In that due amount, again we need to receive that first and final call account. So while receiving, listen here carefully, while receiving, we are not receiving the entire 40,000 shares. In that 2,000 shares, they are not paying the amount on the first and final call. So what happens here? 40,000 minus 2,000, you will be getting 38,000 into 4, you will be getting exactly that 1,52,000 amount we are receiving on the first and final call amount, being the call money received. Again, what happens when the call money is received? Again, how many shares they didn't pay the amount? 2000 shares they didn't pay the amount. That is nothing but forfeiture. Whenever they are not paying the amount, means the company will be cancelling the shares. So here what happens? The next transaction, equity share capital account debit. The amount is of 20,000. Now we got the 20,000 means 2,000 into 10. Why 2,000? Because they didn't pay the amount of the first and final call. 2,000 into 10 will becomes 20,000. To share forfeiture account, how much they have paid till now? They have paid the application money, allotment money. Here premium should not be included. So here what happens? Share forfeiture account, how much they have paid application as well as for the allotment, they have paid the amount of 6 rupees. So 2,000 into 6, it becomes 12,000. Again, in the last, for the first and final call, they didn't pay the amount. So here to equity share first and final call, 2,000 into 4, it becomes 8,000, being share forfeiture for non-payment of first and final call money. Again, next transaction is for the reissue of the shares. Reissue means what happens? We need to give at a discount. So that forfeited shares they will not purchase for the similar value. So we are giving a discount. We are receiving the amount. So automatically what happens here? Bank account debit. So how much is the reissue price? Is 16,000 into 8. It becomes, that is 2,000 into 8. It becomes how much here? 16,000. Again, share forfeiture account debit. So how much is the discount we are giving? Overall share price is 10 rupees, excluding premium it is 10. So minus we are giving for here is 8, reissue price is 8, you will be getting 2 rupees. So 2,000 into 2, it becomes 4,000. 2, equity share capital account 20,000, being reissued of the forfeited shares. The last transaction is for what happens here, that whatever the share forfeiture excess amount we got, the surplus amount should be transferred to the capital reserve account. You can clearly see here, note the point here. See, in the credit forfeiture we have 12,000 minus the debit forfeiture 4,000. The remaining amount will be how much? 8,000. The debit, that is the credit forfeiture, how much we have share forfeiture? 12,000 minus 4,000, the debit forfeiture will be getting 8,000. The excess on this amount should be transferred to the share capital account. Which amount should be transferred to the share capital account? That is capital reserve account, share forfeiture account. Share forfeiture account. So share forfeiture account debit to capital reserve account. The amount excess amount of share forfeiture should be transferred to the capital reserve account. Coming to the next problem, we can see as it is. Next problem, the 17th problem, the Venkateshwara Company Limited. Venkateshwara Company Limited issued 60,000 equity shares of rupees 10 each at a premium of rupees 2 per share, payable as follows: on application rupees 3, on allotment rupees 5 including premium, on first and final call rupees 4. All shares were subscribed and allotment made. All monies were received except Mr. Suresh failed to pay the first and final call money on 1,500 shares. Subsequently, all the shares were forfeited and reissued to Mr. Naresh at the rate of 8 per share as fully paid. Pass the necessary journal entries. So my dear students, here we can see that 60,000 equity shares are issued by the Venkateshwara Company Limited at 10 rupees. Face value is 10, but the premium is given 12. So the issue price it becomes 12. So the issue of shares at premium here considers. So 12 rupees they are issuing. On application 3, on allotment 5. On allotment 5 means it includes premium also. The actual allotment amount can be, that is 3 rupees. Then remaining 2 rupees will be for the premium. On first and final call it is of 4 rupees. All the shares were subscribed and allotment made. All money were received. All the transaction, application, allotment money, all money were received, but they didn't receive the amount on which thing? First and final call. Who is that person didn't pay the amount? Mr. Suresh. On how many shares he didn't pay the amount? 1,500 shares. Subsequently, all the shares were forfeited and reissued to which person? Mr. Naresh. Why they cancelled the shares means he didn't pay, Mr. Suresh didn't pay the amount on the first and final call. So automatically the shares were being cancelled by the directors and it has been issued to Mr. Naresh at the rate of 8 as fully paid up. Now we need to see the given informations. Given informations, we know that premium per share is given as rupees 2. And again they are given on application 60,000 applications are issued. The application amount is 3 each. We used to get 1,80,000. On allotment again 60,000 into 5 will become 3 lakhs. That is which includes the premium. Premium amount is how much is there? 60,000 into 2 it becomes 1,20,000. On call, that is on first and final call, 60,000 into 4 each it becomes 2,40,000. Issue price per share, you can see the issue price here 3 plus 5 as well as 4 it becomes how much? 12 each. So for the forfeiture, how many shares has been forfeited? We can see that 1,500 shares are forfeited at the rate of 10. Only we need to consider the face value, not the premium value. Here we should not consider premium value in the forfeiture. So 1,500 into 10 it becomes 15,000. Unpaid amount, on which thing they have unpaid? So they have unpaid on the amount of first and final call. So unpaid amount 1,500 shares into rupees 4 each will be getting 6,000. Creditor to which thing? Share first and final call account. Reissue price 1,500 shares has been reissued to Mr. Naresh at rupees 8 rupees. Rupees 12,000 debited to which account? Bank account, because we are receiving the amount there. So in the books of Venkateshwara Company Limited, journal entries related to the issue of shares at premium. So automatically what happens while receiving the amount on the equity share application? Bank account debit to equity share application account. How much is the amount? 60,000 into 3 it becomes 1,80,000 and 1,80,000. Now what we need to make, when we have received the amount, that amount should be transferred to which thing? To the equity share capital account. Equity share application account debit to equity share capital account, that is 60,000 into 3, the same amount 1,80,000 and 1,80,000 being the application money transferred to which thing? Share capital account. Again see here allotment. While coming to the allotment, we have an important transaction, that is here important transaction. Allotment includes what here? Premium. So equity share allotment account debit. How we can take it here? Equity share allotment account debit to share premium account to equity share capital account. So only premium is considered as how much here? 2 rupees. So automatically what happens? Equity share allotment account overall amount how much? Overall amount is considered as 5, and again we are giving a premium of rupees 2 rupees. So equity share allotment account debit 3 lakhs to share premium account 1,20,000. Remaining allotment amount will be transferred to the equity share capital account. While receiving entire amount is shown, that is bank account debit, that is 60,000 into 5, 3 lakhs and 3 lakhs as it is, it has been shown because we are receiving the entire amount on the allotment. Again going for the next first and final call, equity share first and final call account debit to equity share capital account, being the call money due here. How much money it is due on how many shares means 60,000 worth of shares we need to receive the amount of rupees 4, and again we can see that whether we have received the entire thing. See here we are not receiving the entire amount. Why we are not receiving the entire amount means because the 1,500 shares we didn't get the amount of which thing? First and final call amount. Mr. Suresh didn't pay the amount on the first and final call. So we are not receiving that amount. So automatically it reduces. Bank account debit to equity share first and final call account 2,34,000 on 60,000 minus that 1,500. So you will be getting the remaining thing. So again the next transaction, whenever the person, the Mr. Suresh is not paying the amount means it has been cancelled. So cancelled means what will be the journal entry here? Equity share capital account debit to share forfeiture account to equity share final call account. How many shares are cancelled? 15,000 shares are cancelled at the rate of 10. So that is 1,500 shares are cancelled at the rate of 10. So equity share capital account 1,500 into 10 it will become 15,000. To share forfeiture account. What is the share forfeiture account? What the amount they are paid till now. So how much amount they have paid for the application as well as for the allotment excluding premium, it becomes 6 rupees. So 1500 into 6, it becomes 9000. To equity share final call account, on 1500 shares that didn't pay the equity share first and final call account, that is of 1500 into 4, it becomes of amount of 6000. Now there is the non-payment has been made. Next we are receiving the amount of which thing? Reissue. On the reissue, when we are receiving, what happens here? Bank account debit. For which person we are selling the shares? Naresh. So we are receiving the amount, so we need to consider only bank here. So bank account debit. How we are considering bank account? 1500 into 8. Why we are giving at 8? Because at the reissue we can't give at the similar values. 1500 into 8, it becomes 12,000. Share forfeiture account debit. Again what happens here? How much is the discount given here? 1500 into 2, it becomes 3000. To equity share capital account, it becomes 15,000. The last transaction, share forfeiture account debit to capital reserve account. You can see the difference here, that is of the credit balance of share forfeiture account is 9,000 minus the debit amount of share forfeiture 3000. The remaining 6000 will be moving to the next thing called as a capital reserve account. The remaining 6000 will be moving to where? To the capital reserve account. Capital reserve account. Share forfeiture account debit to capital reserve account. The amount is rupees 6000. Coming to the next problem, we can see the next problem, that is of 18th problem, March 2015. So Varsha Company Limited issued 10,000 preference shares . Coming to the next problem, it is of 18th problem, that is March 2015. Varsha Company Limited issued 10,000 preference shares. Till now we have seen that equity shares, now they are given the preference shares. Only in the place of equity we will be considering preference shares. Varsha Company Limited issued 10,000 preference shares at rupees 100 each at a premium of rupees 5 per share, payable as follows: rupees 10 on application, rupees 45 on allotment including premium, rupees 30 on first call, rupees 20 on final call. So here they have separated the first call and final call. So we need to pass extra 2 transactions. All the shares were subscribed and the money duly received except on final call on 500 shares. On 500 shares we didn't receive the amount on final call. The directors forfeited the shares and reissued at 90 each, fully paid. Pass the necessary journal entries related to the above information. What is the given information related to the Varsha's company? Means premium per share is there, rupees 5 is given. Given information for issue of shares at premium. So on application 10,000 into 10, how much it becomes? 1 lakh. On allotment 10,000 into 45, you will be getting how much? 4,50,000. Again in that premium how much is there? 50,000. In 4,50,000, 50,000 is the premium. Then 4 lakh will be the actual allotment amount. On first call 10,000 into 30 you will be getting 3 lakhs. On final call 10,000 into 20 you will be getting 2 lakhs. Issue price per share is 105. Face value is 100. Issue price of the share is 105. So this problem will be treated as what? Issue of shares at premium. Given for forfeiture, what are the forfeiture information is given? Share capital forfeited 500 into 100, that is 500 shares. They didn't pay the only final call amount. First call amount is paid, final call amount is not paid. So 500 into 100 it becomes 50,000. Unpaid amount how much it becomes? 500 into 20, 10,000 is unpaid. That is credited to which call account? Final call account. We are making the reissue. 500 shares are reissued at how much? 90 rupees. So it becomes how much? 45,000 debited to which account? Bank account. Coming to the solution here, in the books of Varsha Company Limited, journal entries relating to the issue of shares at premium. So while receiving the application amount, as it is, you know that bank account debit to preference share application account. Again, while transferring preference share application account debit to preference share capital account. How much is the shares we are giving here? 10,000 into 10. It becomes amount is 1 lakh and 1 lakh, 1 lakh as well as 1 lakh. So we have transferred the amount. The next transaction is related with what? The allotment. So preference share allotment account debit 4,50,000. Here 1 lakh, that is 10,000 into 45. Again we have the premium. Premium, how much we have? We have the premium of rupees 5. 10,000 into 5 becomes 50,000. Again the remaining amount should be transferred to the preference share capital account, that is the allotment 4 lakhs. So entirely we need to receive the amount of how much? 4,50,000. So bank account debit to preference shares allotment account 4,50,000 and 4,50,000 being the allotment money received. So again in the preference shares first and final call, only first call is given, separate transaction should be passed here. Preference share first call account debit to preference share capital account. So here 10,000 into 30 you will be getting, so you will be getting 3 lakhs and 3 lakhs. The same amount we are receiving, the first call entire amount we are receiving, bank account debit to preference share first call account 3 lakhs and 3 lakhs. While going to the next transaction on the final call due, preference share final call account debit to preference share capital account 10,000 into 20, 2 lakhs and 2 lakhs. Again this amount on the final call we are not receiving the amount on how many shares? On the 500 shares. So bank account debit, here what happens? 10,000 minus 500, note it here. Only on first call we have received the amount, only on final call we are not receiving. 10,000 minus 500 you will be getting 9,500 into 20, you will be getting 1,90,000 and 1,90,000. Again for that 500 shares we need to make the forfeiture. Preference share capital account debit. Again what happens here? 500 into 100, the original value, which should not include which amount? Premium amount. 50,000 you will be getting. 500 into 100, 50,000 to share forfeiture account. How much they have paid till now? 500 into 80, it becomes 40,000. Which are the amount they have paid? Application, allotment as well as the first call. They didn't pay the final call. To preference share final call, this is an unpaid amount, 500 into 20. So again what happens? This amount has been reissued. The shares has been reissued. Reissued means what happens here? Bank account debit. How much is the reissue price here? They are given 500 into 90. It becomes how much? 45,000. So how much is the discount we are giving here? 10 rupees. So share forfeiture account debit 500 into 10. It becomes 5,000. To preference share capital account it becomes how much? 50,000. Being reissued of which shares here? Forfeited shares. Again the last transaction is related with what? Capital reserve. How much is the excess amount we have? See here, the debit amount how much we have? 40,000 we have. That is credit amount. See here, to share forfeiture account we have 40,000. Debit amount 5,000. 40,000 minus 5,000. How much is the amount you will be getting here? 35,000. It should be transferred to the capital reserve account. Capital reserve account. The next problem, which is the homework problem for you, which should be made and it should be sent to the concerned faculties. So the 19th problem of March 2016 question paper I will be explaining. Take down the notes, that is I will be explaining neatly, mark it in the pencil and make the homework and send it to the concerned faculties. March 2016, Akash Company Limited issued 40,000 equity shares of rupees 10 each at a premium of rupees 2 per share to the public, payable as follows. Rupees 3 on application, rupees 4 on allotment including premium, rupees 3 on first call, rupees 2 on final call. All the shares subscribed and the money duly received except the final call on 800 shares. The directors forfeited these shares and reissued them as fully paid up at rupees 7 per share. Pass the necessary journal entries related to the above information. What is the premium given here? 2 rupees is the premium given on application. You can make it 40,000 into 3. It becomes how much? 1,20,000. On allotment, 40,000 into 4. It becomes 1,60,000. But 2 rupees is for what? Premium. 2 rupees is for the allotment. So automatically what happens on allotment transaction comes means equity share allotment account debit to security premium account to equity share capital account. So 40,000 into 4, that is equity share allotment account, will be getting 1,60,000 under the debit. Credit what happens to equity share security premium account, automatically how much will be getting 40,000 into 2, 80,000. Again to equity share capital account 40,000 into 2, it becomes 80,000. On first call 40,000 into 3, 1,20,000. On final call 40,000 into 2, will be getting 80,000. How much shares they didn't pay the final call amount? You can see here 800 shares they didn't pay the final call amount. So when they didn't pay the final call amount, the shares will be cancelled. 800 shares cancelled. What is the face value of the share? 10. So it becomes 8,000. Unpaid amount, how much is there? 800 into 2, that means which amount is unpaid? Final call amount is unpaid, 1,600. That should be credited to share final call account. Reissue price, what happens here? 800 shares into rupees 7, it becomes how much? 5,600. Debited to which account? Bank account. So consider this problem, make it as an homework. Listen here. On the application, what are the transactions it will be coming? First is the receiving transaction, receiving amount transaction. Next is transfer to the share capital. So equity share application, that is bank account debit to equity share application account. Transferring equity share application account debit to equity share capital account. On allotment, again two transactions will be coming. What is the first transactions on the allotment? It will be there here on the premium. Again equity share allotment account debit to security premium or share premium account to share equity share capital account. Next transaction what happens? Bank account debit to equity share allotment account. On first call months what happens? Again we will be first making the due transaction. So what happens there? Equity share first call account debit to equity share capital account. Next transaction bank account debit to equity share first call account. Final call what happens? Again here equity share final call account debit to equity share capital account, bank account debit to equity share final call account. Here they didn't pay the share value of 800 shares, so again we need to make a forfeiture. So forfeiture transaction what happens? Equity share capital account debit, that is 800 into 100. Again we will be making what? To share forfeiture account, that is how much they have paid till now, to share final call account. They didn't pay the final call account. Next reissuance what happens there? Bank account debit, share forfeiture account debit to share capital account. Last transaction what happens there? Transferring the excess amount to the capital reserve account, share forfeiture account debit to capital reserve account. Thank you my dear students.